and welcome back. Jeanie Marten with Jeanie Marten Real Estate, and today we're diving deep into the Sachse real estate market for May of 2026. We're going to compare what happened to May of this year to May of 2025, and I've got a lot to tell you. There is a lot going on in this market that every buyer and every seller needs to know and understand right now. We're going to talk about inventory, pricing, sales volume, how long homes are sitting on the market, whether sellers are helping buyers with closing costs. And at the end, I've got some exciting commercial development news for our Sachse community that I know you're going to want to hear. So grab a coffee, sit down, and let's talk numbers. This is a meaty one. Let's start with something that actually surprised me when I pulled this data, and that's the number of homes that closed in May. In May of 2025, we had 22 closed residential sales in Sachse. That's a pretty decent number. That's about one sale every day and a half. But here's what's really interesting. In May of 2026, we had 29 closed sales. That's a 32% increase in closed transactions year over year. So at first glance, you might say, Jeanie, the market must be doing great. Way more homes are selling. And in terms of transaction volume, yes, more homes exchanged hands in May of 2026 than May of 25, but that is a positive sign. And I want to acknowledge that. But, and this is a big but, we need to look at that number in context, because when you layer in inventory and pricing, the story gets a little more nuanced. And we're going to do exactly that right now. Okay, inventory. This is the one that jumped out at me the most. And honestly, it's what prompted a lot of the questions I've been getting from clients lately. Right now, as of mid-June 2026, Sachse has 111 active residential listings on the market. If you add in homes that are under contract in active statuses like active option or active contingent with a kick out and pending, the number climbs to around 140 total properties in some stage of the transaction pipeline. Now let me give you some historical context, because this is where it gets really interesting. Using MLS data and going back 5 years, here's what the active listing count looked like in the month of May. May of 21, we had 36 active listings. In 22, we had 45. In 23, we had 63 active listings. In 24, we had 124. And in 26, we have 114 active listings. You see that trajectory? Active listings have been climbing steadily, dramatically really, since post-pandemic market of 2021. We nearly tripled from 36 homes to over 100 in just 4 years. Now I want to be transparent. May 2026 at 114 is actually slightly lower than May of 25's 124. So on paper, we have slightly less inventory than a year ago. But are we still at historically elevated levels, nearly triple what we saw in 2021 during the frenzy? And for context, this is important. In 2008 and 2009, during the Great Recession, the DFW market and suburbs like Sachse saw active inventory surge to levels that felt overwhelming at the time. And what we're seeing now is in that same zone of elevated supply. I've been getting questions from buyers and sellers saying it feels like a lot of homes are on the market. And the data backs that up if you're a buyer. You have options right now. If you're a seller, you need to understand that you're competing with a lot of other sellers. Now let's talk about what everyone wants to know. What are homes actually selling for? In May of 2025, the median closed sales price in Sachse was $4,035. In May of 2026, the median closed sales price was $429,000. So the median price went up about $25,000. That's roughly 6.3%. That's an increase year over year. At first glance, that sounds like prices are rising, and technically the median is higher. But I want you to understand something really important about what's happening in this market. When I look at the longer trend, and this is from MLS going back to 2022, the picture's a little more complicated. In May of 2022, the median close price was $528, and that was the peak of the COVID era market. In May of 2023, it was $480,000, already declining. In May of 2024, a significant drop to $390,000. In May of 2025, back up, slight recovery to $403,500. In May of 2026, $429,000, another tick up. So yes, we are recovering from the 2024 lows, but we are still a full $100,000 below where we were in May of 2022. That's not a recovery, that's a correction that is slowly working its way back. And I want to be honest with you, there are real headwinds still in this market. The median list price in May of 2025 was about $469,950, and in May of 2026 it was $475. So sellers are still pricing high, close to the 2022 peak mentality, but the gap between what sellers want and what buyers are paying is meaningful. Now, let me break down what's happening at a street level. When you look at the actual closed sales in 2026, the price range was remarkably wide. The lowest price home that closed was $239,000, a smaller home in Hillside Edition built in 1959. The highest was $975,000, a 5-bedroom home on 2.47 acres in Pleasant Valley Ranch Estates. So we have an enormous range of what's selling. The majority of the activity, your bread and butter Sachse moves, is happening in the $350,000 to $550,000 range. And in that range, well-priced homes are moving and overpriced homes are sitting. Let's talk about days on market, because this is another place where the data tells an interesting story. According to the MLS statistics, the median days to sell in May of 2025 was 26 days. In May of 2026, the number came down to 11. Now, before you jump to any conclusions, Jeannie, that sounds like the market is hot again. I want you to dig into the raw data with me for just a second. When I pulled every individual closed sale for May of 2026 and looked at their cumulative days on market, I saw a very bifurcated, that's your word of the day, bifurcated market. On one end, you had homes flying off the shelf, multiple listings sold in 1, 2, 3, 4, or 5 days. And those were well-priced, move-in ready homes in desirable subdivisions like Woodbridge and Parkwood Ranch. On the other end of the spectrum, you had homes that sat for 79, 90, 143 days, finally going under contract and closing in May. This is the story of the market. It is not a rising tide lifts all boats situation. The right home, priced right, in the right condition will quickly sell. But homes that are overpriced or that have deferred maintenance or that are in less desirable locations, they're sitting, and some of them sat for months before buyers finally bid. In comparison, in May of 2025, we also saw a wide range with homes sitting as long as 310 days before selling. Yes, you heard me right. A home that listed in mid-24 finally closed in May of 25 after nearly a year on the market. Both May 2025 and May 2026 are showing a 2-speed market, but the median for 26, that 11-day figure, suggests that the homes that are priced and positioned well are finding buyers a little faster than last year. Let me give you a quick but important data point. The sale price to list price ratio. During the peak market of 2021, sellers in Sachse were getting an average of 103.2% of their list price, meaning buyers were paying over asking. In 2022, it hit 104.9. Those are wild years. In May of 2024, that ratio dropped to 97.5. Sellers were getting about 2.5% below their asking price on average. In May of 25, the ratio was 98.7. In May of 2026, it's 98.8. So sellers are now getting just over 98 cents on every dollar of list price. The recovery in the ratio is real but modest. What that tells you as a seller, if your list price is $500,000 today, expect to negotiate. The data says you'll likely close somewhere around $494,000. Price accordingly from the start. Now let's talk about something that I think really tells the story of the seller-buyer dynamic right now. Are sellers helping buyers with closing costs? This is something I've been watching closely. When sellers are in a position of strength, when there's low inventory and high demand, sellers don't need to give buyers anything. When the market shifts and sellers need to compete for buyers, you start seeing sellers step up to pay some of the buyers' closing costs. When I pulled the May 2026 closed sales and looked at the seller paid field in our MLS, here's what I found. Several sellers contributed to their buyers' closing costs. Even on homes in the $400 to $450 range, I saw sellers contributing amounts like $5,000 and $6,000 to help buyers close the deal. By comparison, when I look at 2025 data, there were also sellers contributing, but the patterns appear similar. Some transactions had contributions, others did not. Here's what I want you to understand. In 2021 and 22, seller concessions to closing costs were essentially extinct. Sellers were getting multiple offers over asking. The last thing they were doing was paying buyer closing costs. The fact that we're seeing seller contributions now is a clear market signal. Buyers have regained leverage, and sellers who want to sell need to be willing to negotiate, not just on the price, but on the terms. If you're a buyer right now, don't be shy about asking for closing cost assistance. With interest rates still elevated, that upfront cash relief can make a meaningful difference in your monthly payment. Talk to your lender first so you know how much help you can actually use. I actually recently had a transaction where the agent didn't check with the lender and asked for way more closing costs than was even allowed by their loan product. It was kind of silly. If you're a seller, you need to factor this into your net proceeds calculation. Helping a buyer with $5,000 or $10,000 in closing costs might be the difference between a deal and a dead contract. It's a tool. Use it strategically. I want to give you my honest professional read on where this market is right now, because I know you're not just here for the numbers. You want to know what I think. My gut is this: the market does feel elevated. We have significantly more inventory than we had even 2 or 3 years ago. Homes are sitting longer if they're not priced and positioned correctly. And when I look at the active listing count, 111, 114, 124 homes on the market, in a community the size of Sachse, that's a lot of competition for sellers. Some of my clients have said to me, Jeanie, this feels a little like 2008, and I hear that. The elevated inventory and the price softness from 22 to 24 does have some surface similarities to the pre-foreclosure environment. But I want to be careful here because there are important differences. In 2008, we had a foreclosure wave, rampant subprime lending, and a financial system under stress. What we have today is more of a reset from an artificially hot market caused by COVID, low interest rates, and pent-up demand. The fundamentals of home ownership in the DFW area, job growth, population growth, in-migration, those are still solid. That said, and I say this with respect and honesty, if you bought at the peak in 2021 or 2022 and you need to sell today, the math is challenging. You may not recoup what you paid. That's a reality that some sellers are facing. And the best thing I can do is give you accurate data so you can make an informed decision. For buyers, this is actually a window of opportunity. More choice, more negotiating power, seller concessions, and time to think. Our motto during COVID era negotiation was, if you have to sleep on it, you ain't gonna sleep in it. That's terrible. That does not make for great decisions. This is the kind of market where you can actually make a thoughtful purchase without being pressured into waiving inspections or paying $50,000 over asking. Okay, I want to end on some exciting community news because Sachse's growth story isn't just about residential real estate. Our commercial landscape is evolving too, and that matters for property values and quality of life. First up, and some of you are going to give me the boo and some of you are going to give me the yay, but McDonald's on Woodbridge Parkway. A new McDonald's is coming to the Woodbridge Parkway corridor, adding another convenient dining option right in the heart of one of Sachse's most active retail areas. More retail development on Woodbridge Parkway is great news for the surrounding neighborhood. It means increased foot traffic, more economic activity, and continued investment in the area's infrastructure. Here's one though that a lot of you are excited about, and that's Chick-fil-A has broken ground on Miles Road. Yes, it's happening. Construction has officially started on a new Chick-fil-A location on Miles, and that is the kind of anchor retail that communities love. Chick-fil-A locations consistently attract high traffic and often signal confidence in the area's growth trajectory. If you're a homeowner near the corridor, that's good news for your neighborhood's long-term appeal. These are the kinds of development that matter when you're thinking about where to buy or where to raise a family. Sachse continues to attract investment, and that speaks well of the community's fundamentals, even as the residential market works through its current cycle. So let's recap what we covered today. Sales volume is up, 29 closed sales in May of 2026 versus 22 in May of 2025, a 32% increase. Inventory remains elevated, 114 active listings in May of 2026, still historically high at roughly 3 times what we saw in 2021. Median prices are recovering, $429 in May of 2026 versus $403.5 in May of 2025, but we're still well below the $528 peak of 2022. Days on market, the median improved to 11 days in May of 2026 from 26 days in May of 2025. But the market is bifurcated, that's your word of the day. Well-priced homes move fast. Overpriced homes don't move at all. Seller versus list price ratio at 98.8%. Sellers are getting very close to their asking price, but buyers have real negotiating room. Seller concessions. Sellers are actually contributing to buyers' closing costs in a way we didn't see in 2021 or 22. Commercial growth, McDonald's on Woodbridge Parkway and Chick-fil-A breaking ground on Miles Road are positive signs of continued investment in our community. Whether you're thinking about buying, selling, or just watching the market, I hope this gave you the clear, honest picture that you were looking for. If you have questions about your specific information, your neighborhood, your home value, or what the market means for your next move, please reach out. This is exactly what I'm here for. I'm Jeanie Marten with Jeanie Marten Real Estate. Thank you so much for watching, and we'll see you next time.